Henri, thank you very much for doing this. I've been looking forward to it for a long time. I'd like to start really by asking you about sort of the macro forces that are operating on AXA and on the global insurance industry. When you think about those forces that are likely to transform what you do, deeply influence your strategy, make you think much harder than you would otherwise think, could you talk about a handful of these forces and with each one maybe just say why it's so important to the industry?
It's a great question to start with. It's not an easy one. I would put it under the umbrella the rebalancing of the world. Okay. So the forces we see at work in an industry which by nature is a long-term one are, of course, first, the emergence of new economic powers. The fact that some old nations like China are recapturing their position in the world, but the fact also that we see new nations coming up, either because of their demography or because of their skills or because of their raw materials. So that's the economic piece. The second very large force at work is technology. Internet is changing the world the way printing has been changing Europe and the world in the 15th century, and probably the way oil has been changing the world at the end of the 19th century. So technology is very important, and 3D printing is probably only going to add to that. For us, of course, there are two other major forces. One of them is what's going on with the environment and the fact that natural catastrophes, natural disasters, risks of pandemics are existent or increasing is something we have to take into consideration. And there the world is changing. And last but not least, demography and longevity. Probably the largest source of growth in the 20th century was the increase in life expectation. The fact that people have moved in terms of life expectation at birth from around 45 years in 1900 to 76 in 2000. It's 30 years more, and generally speaking, in good or better health. This has changed the world. What we are seeing now is an aging population, and in many parts of the world, a declining demography, but to an uneven level. So these are the key forces we are seeing. Some of them have very positive implications for our business. Some others are more threatening, but it's opening a very, very large number of opportunities.
So let me ask you, let's go down these, and I'm going to ask you if you could give me sort of one example that comes to your mind. When you think about emerging powers, let's take India just as an example. How does the notion of emerging powers affect the industry? Obviously there's globalization, but does it force any other kind of thinking?
Sure, because our business is to identify, understand, manage, price, cover risk. So the nature of the risks is changing, okay. The localization of the risks is changing, and risks are evolving basically with the wealth of the world. So when a vast amount of wealth is created somewhere, the amount at risk is increasing, and the will by the populations owning this wealth to protect it is increasing. To give you another example, which is a very simple one, China. The Chinese people are now buying 19 million cars a year, which is more than the US. And all of them, by definition, or most of them, are brand new cars. For us, it's a market which was non-existent 10 years ago. And potentially, it's the largest in the world.
Okay. So let's take technology, and maybe to narrow it a little bit, I've heard you talk about digitalization. Give me an example of how digitalization is one of these mega forces in terms of how it actually affects you or what it causes you to think about.
Well, if you segment the value chain of insurance, two things are critical. Collecting and understanding data and having the relationship with the customer. Digitalization and big data are changing these two elements. on big data, if you want to be insured for your car, what you were usually doing was seeing an agent or even going through a direct writer, but having to answer yourself 15, 20, most of the time 30 questions to try to understand what your risk profile was. In a few years, I don't know if it's going to be 3 or 10, but within a few years, if you take a long-term perspective, you won't need to answer these questions because the data we will have at hand will give us much more information than the 30 questions we were asking. The second point is on the relationship with the customer. Well, internet is allowing us to have a proximity with the customer and a reactiveness which we couldn't have before if we use it properly. So these are two very positive developments. But to be fair, I have to mention also the fact that this is changing the game in terms of, I would say, we need to understand much better where the frontier is between the information we can legitimately use and the information we shouldn't use. And there today, it's an open territory with say low standards. And we will have to define higher standards going forward because the very positive developments of the technology are counterbalanced by significant risks if the, I would say, discerning ability of the people using the data is not brought to a higher level.
You mentioned environment, and obviously there's an issue here of more catastrophes. But this is the question I want to ask you about environment. As an order of magnitude, do you feel that climate change is basically changing the game for insurance? I mean, when one reads about all the studies that are being done and the level of problems that could very well arise, is this a total game changer for you, or is this something that you have been thinking about and that you feel will be accommodated more or less in the course of business? How much of a discontinuity can this be?
It can be a very significant one. I mean, if you look at two recent examples, the tsunami in Japan and the floods in Thailand, in a world which is much more interconnected in terms of, I would say, economic networks, supply chain, these two events, which were very significant ones, but not, I would say, secular disasters. They were very, very significant ones and very sad ones, but not secular ones. You've seen all the consequences on the economy worldwide. I think a lot of people have learned the lesson, but what it shows is that it's becoming a very real game changer. And there is another reason for that. I mean, if you look at where wealth is concentrated in the world, 80% of the wealth is concentrated within 50 kilometers from the sea coast or the rivers. For obvious reasons, because for ages mankind has concentrated in the places where water and transportation was available. So the accumulation of wealth in these places, with the sea level going up, with storms increasing, this is going to increase the risk.
Okay, but it's going to increase the risk in a way that will transform the insurance industry, or one that you feel you can anticipate?
It's our job to anticipate. And it's transforming, and we anticipate. One of the elements we have to take into account is the interconnectedness. Okay. Is way larger than what it used to be before. Because 40 years ago, the fact that a factory would be cut off or wiped out in Thailand would never have affected the automobile industry or medical instruments in very different parts of the world. Today, it can happen. So understanding the interconnectedness is something very, very important, because this is what can create very unexpected consequences if you have underestimated it.
Okay. And then the final one, having to do with demography. You can more or less anticipate a pattern of increasing aging and also declining morbidity. What does this actually mean? What does it mean for you?
Well, first, I mean, what we can see is that people are living longer and longer in better and better health. So it's raising the question of the retirement age and the pension issue. So it's absolutely obvious that at the pace at which life expectancy is increasing, which is still a quarter every year, meaning a baby born tomorrow will live 6 hours longer than a baby born today, which looks huge. So at this pace, it's clear that this is going to have an impact on the economy and that we will have to, quote, reinvent the way we look at the working life, the way we look at the education systems, the way we look at the health systems. Are we sure that people will have enough to, I would say, live well the end of their lives, or are they going to outlive their assets? This is one of the traditional questions of the insurance industry. And I think we have to participate to the public debate there. We have to provide solutions in terms of products, but we have also to do some pedagogy to help the broad public and the administrations understand what is at stake there. I would add one thing. Today, people have a tendency to see the increase in life expectancy. They underestimate probably two things. The risk of pandemics. Since the big Spanish flu in Europe in the 20s from the past century, basically something which has disappeared from the collective memory. But at the time, the cost of the Spanish flu was more casualties than the First World War. Right. And everybody has forgotten that. Right. It could come again. It's one of the subjects on which we are funding fundamental research with l'Institut Pasteur to try to understand how you can, let's say, circumvent that. The other side of the coin is, on the contrary, the very positive effect of medical innovation. At the pace at which knowledge is accumulating, it's very probable that some diseases which were seen as incurable 10 years ago will become just aggravated risks. And I will give you a very precise example. I vividly remember the very week where I started my career in this company, there was a big article in one of the big French newspapers explaining that insurance would never deal with AIDS. 25 years later, totally wrong. AIDS is a perfectly insurable risk. It's just like other diseases, an aggravated risk, but it's not uninsurable. So the pace at which knowledge is progressing is offering opportunities, but threats do not disappear.
So let me move a little bit into the area of finance and capital markets. I think it's very clear from what you're saying that there are an enormous number of opportunities in all of these changes, but I'm going to ask you about one in particular now, and I would phrase it this way. If you look at the regulatory structures on banks, it appears that banks are becoming more and more circumscribed in terms of what they're able to do. And, you know, with the combination of regulations and capital requirements and all of the scrutiny on risk management, my question is, does your industry have some additional opportunities as a financial institution to do things that maybe at one time you would have, the environment would have been much more competitive, or else you would not have thought of it because it was already occupied by, you know, the big banks and the big investment banks?
That's a great question. Yes, we have additional opportunities, and I will give you one very precise example. But on the other hand, my key concern is more the balance of the global regulation and the interactions between various segments of this regulation. We have undoubtedly more opportunities because insurance is a business model where you collect money but have a very long duration, because your liabilities towards your policyholders have durations which range from, say, 3-5 years to 40-45 years. So by nature, we can be long-term investors. And to give you the example of Europe, where the banking regulation is the new banking regulation is forcing banks out of the financing of some parts of the economy, we can lend directly to some large corporations or some middle-sized corporations to a much bigger extent than what we were doing before, to a way much more similar to what the US industry is doing. So yes, it's opening new avenues. But doesn't mean that I am overly optimistic, because my concern is more who has a holistic view of the system? And I think one of the things which went wrong following the crisis was this feeling that we could have a sort of one-size-fits-all regulation. The financial system is way too complex to be reduced to banks, and the uniform needed for the banks is not the one we need for other animals in the environment. One of the metaphors I like to use is to say, well, the financial system is absolutely like the nature outside. We have understood that to have a good and sound environment, we need to have different animals, different trees, different crops. This translated into the financial world means we need to have different business models, we need to have different risk appetites, we need to have different risk horizons. If you force everybody into the same model, with the same business model, the same risk appetite, the same view of the duration, then, rather than creating balance through diversity, you are going to create volatility through uniformity, which is a very, very bad way to regulate. And I think we have a very big risk of going there.
That's very fundamental. That's very fundamental to the whole financial system now. Just keeping that thought in mind, could you care to speculate on what could the insurance industry look like a decade from now that is different from what it is? Let's make an assumption. Let's make an assumption that the regulators get it more or less right. Not perfect, but there is some diversity. You are allowed to maximize a lot of your strengths. Are we looking at an industry that is substantially different than it is today?
Well, yes and no, which is an easy answer. But to be more specific, the risk is not going to disappear. So if you start from the very basic need, what do we solve for the client? What we solve for the client is we give the client a protection against risks. Risks on his health, on his life, on his assets, financial assets or physical assets. This is not going to disappear. I do not see risk disappearing of the world. The day where the risk disappears in your own life is the very last day of your existence. So I hope it's not going to disappear or not too soon. So the nature of the service we give is not changing. What is going to change is the way we can give the service. And there is, I think we are going to see a lot of changes. Because I think what's happening is the evolution of the markets, the evolution of the technology, the evolution of the regulation is going to enable or will force breakups in the value chain. And you will see players which will stay integrated and global, but you will also probably see entrants and levers at different levels of the value chain. We can have some significant competitors on the data handling, as an example. We can have very new competitors on the service. So I think the box is open, and it's going to be up to each and every company to decide where it wants to be in this repositioning game, knowing that the final service to the customer is not going to disappear, and that even more positively, if you assume the fact that the world is going to continue to grow, to keep growing, if you assume the fact that one of the major forces at work is the creation of a middle class in the emerging world, the opportunities are way broader than what most people think.
So could it be possible, when you think about the value chain, that 10 years from now there will be new entrants, really mega entrants, but they would only have one part of the chain. For example, all the data accumulation and the data analysis. That you would, there would be, Google Insurance, but all they're handling is one part of this chain, but many insurance companies would actually key on that.
I think you will have all the models, because the critical elements are you able to access, understand the data, identify the risk, price it? Are you able to manage a relationship with the customer? If you can be sure that you have a competitive differentiation and an advantage in one of the elements of the value chain, then you can be pretty confident that you will survive. If you are undifferentiated, or worse, if you are, I would say, unfavorably differentiated, then it's pretty clear that you will disappear. At what pace is it going to happen? Who knows? Probably going to depend on the maturity of the markets, the growth, the regulation. But I think it's an unavoidable trend. But the way we've seen it in many other industries in the past, one of the things I try to keep explaining to the teams is we have to make a difference between the product at one given time and the service we give. The people in the 19th century who were running companies providing transportation by horse carriage, if they thought their core business was horse carriage, they were in a bad position. If they had understood that their business was transportation, well, they moved to railways or to automobile. So we have, to a certain extent, exactly the same dilemma. We need to understand what is the fundamental service we give, and then we need to be ready to reopen the box and question everything on the way we provide the service.
So you run one of the world's largest financial institutions, and I'm going to ask you to kind of stand outside AXA for a second and just assume I'm going to anoint you as a financial statesman and ask you about some of the issues in the global financial system now that we haven't discussed. For example, do you feel that since the financial crisis, when you look at everything that has been done by internally in financial institutions by way of risk management and externally by way of regulation, added reserves, and all the things that are in train, do you think that we are reaching a level of financial stability which is durable? That is, that the odds of a kind of financial debacle of the kind we had is way out into the future. I won't say it will never happen, but that we have actually learned an enormous amount from what occurred in 2008, and we're on much better footing? Or do you worry that, yes, a lot of things have been taken, a lot of actions have been taken, but we shouldn't overstate this because we are still quite vulnerable given the way that the world economy is changing and the way that finance operates? Where do you come down on this basic?
On the latter part of your comment, for very simple reasons. Yes, we've learned a lot, and it would be too easy to say that the I would say regulation has been poor, that the bankers are horrible people, and so on and so forth. I mean, history is full of financial crises. So we've learned a lot, and we already know that the fact that we've learned a lot is not going to be enough not to see it again. So the question for me is more to understand where is the next crisis going to come from, and what can we do to try to avoid it or mitigate it. And from that standpoint, I think we cannot say that what has been doing up to now to prevent the effects of the previous crisis is enough to face the next one. I think what we need to say, people need to understand that we are in a world which is changing at a pace which is accelerating. There are phases in history where things are more or less stable, and there are phases in history where for 10 years, 50 years, 80 years, 100 years, things are accelerating, and you see a large number of, fundamental changes. We are in one of these periods because of this conjunction we were discussing at the very beginning of this discussion of political, economic, demographic, technological changes. So we have to be prepared for more profound changes. This rebalancing of the world, it's like a very big earthquake. It's like two tectonic plates, moving. It's creating frictions. So we will see more crises because there are accumulations of tensions. I think one of the ways to mitigate them is to, in the financial system, be sure that the economic powers have a financial system connected to the rest of the world and I would say up to their real weight. And one of the I would say concerns I have, or one of the things I'm dreaming about, is the idea that if we want more stability in the international financial system, we need to have the Chinese financial system punch its weight into the system. The convertibility of the Chinese currency, the opening of their capital markets, is a necessity for the next 10 to 15 years if we want to find a better balance. Because we cannot be in a situation where the whole world economy is relying only on one or two currencies which have a declining weight in the real, I would say, in the real production, in the real economy.
So, and how would your analysis pertain to the euro? There's a lot of discussion about the euro and whether, long term it's stable, it's viable. But I think in your vision, there are at least three major currencies, correct?
Sure.
So how do you what needs to happen in Europe for the euro to carry the weight of this huge trading?
I'm a deep believer in the strengths of Europe or the necessity of a strong Europe. And I've been an observer and a very, I would say, interested observer in the developments of the euro. When it was created, nobody was saying it was a perfect currency at the very beginning. Everybody knew that for it to be a full success, we needed more integration and more structural reforms. We have, I would say, pocketed the benefit of the doubt for the first 14 years. And now there has been, now it's becoming better, but for a few years, there has been some suspicion because the benefit of the doubt was not deserved. I do not think there is anything flawed with the euro. I think it has brought a lot of things to Europe over the last 14 years, the least one not being the fact that we probably have survived the economic crisis way better with the euro than without, because we would have seen a lot of breakups if we hadn't had the euro. What we lack is discipline and courage to fulfill what was or to finish what was a, quote, unfinished prototype. And what we need to do, everybody knows what we need to do to achieve that. It's structural reforms and less public spending. And it's going to be clear. Either, the generation which is now having the power is doing it, and it's going to be a significant success, and Europe will remain a major economic force, or this generation fails, and it's going to be a disaster, and I would say the growth and the wealth of Europe will decline. It has happened in history. One of the things fascinating me, and it's a metaphor I use many times, is in the 15th century, the richest nation in Europe by head was Portugal, and the poorest was Switzerland. Today, it's the reverse. Guess what? People have had an influence on their future.
And that's a great way to stop.